I'm loading the boat with Tesla calls. Yes, even after it's up 4% on the day. Now, this could be a very terrible idea, but I'm going to explain why. The Rivian deal. Yes, so Rivian got an investment from Volkswagen, and Rivian is a competitor to Tesla. So why would I not just invest in Rivian? Why would I make this investment into Tesla? And why would I do that using call options if I believe this is such a big deal for Tesla, but the deal has to do with Rivian? What's going on? So let's break this down. Number one, Rivian would go bankrupt without a cash inflow. Here's just the reality. They burned $1.5 billion last quarter. With the cash they had available, they'd essentially be bankrupt by the end of the year. Their cash burn is way too high. They don't know how to get some of their costs down as they're scaling production. They need both expertise help and they need both money help. And guess what just happened? They got both of those things. Volkswagen, the German automotive company, they're agreeing to invest up to $5 billion into Rivian. That'll extend their ability to survive until 2026. Now, right now, they're only investing $1 billion, probably because Rivian, frankly, needed $1 billion. Because, again, they probably can't pay their bills. Remember, they're burning $1.5 billion a quarter, so $1 billion probably is like, okay, we can survive. We can pay some bills more. That's great. But it's still a sinking ship. So why is Volkswagen coming to Rivian's rescue? It's because they're the only other option. We're out of competitors in America to Tesla. It's Tesla, and then it's everyone else who loses money on electric vehicles. Now, let's be real. Yes, there is competition in China in the electric vehicle market. There's a lot of competition in China. China's killing it. They are cranking out EVs, and as battery costs come down, margins are coming up at the EV manufacturers. It's actually a great thing. The good thing, though, in America and in the West is we're not really competing with China because everybody has sanctions against China and nobody wants Chinese cars at this point. I'm wholly convinced that if we didn't have sanctions against China and import restrictions against China, we'd all be driving Chinese cars. They're good, and they're, quite frankly, a lot cheaper. That would be good for the consumer, but let's be real, politicians don't really do things that are good for the people. They kind of do things that look good for the people and get votes and then end up having the opposite effect. It's a disaster. Politics sucks. But I want you to think about this for a moment. An investment by Volkswagen into the only competition to Tesla is a way of saying that legacy auto, including even Amazon, who's invested in Rivian, and Volkswagen, are woefully afraid of what Tesla can do. And this is happening at the same time as sentiment for Tesla is in the pooper. Donald Trump has helped with that. Let me be clear about that. Donald Trump has helped push Tesla into the pooper. Because pretty much every single time you see Donald Trump talk, he rants about how terrible electric vehicles are and how bad the range is, and he actually says things that aren't fully true about electric vehicles, but they were true years ago. So he's kind of taking like a 2020, 2016 mentality and applying it to 2024, and it's popular because people who lean right are maybe more likely to be into real big trucks and gas guzzlers, and that's not to say that's a bad thing. Quite frankly, you put the Cybertruck next to a real truck, the Cybertruck is like a tiny little baby. It's teeny compared to a real truck. Like if I really wanted a nice bed I could actually put drywall in and plywood in and I could actually use for work, the Cybertruck's probably just too dang small. Which is unfortunate because my initial impression of the Cybertruck was it was going to be a big old beefy car. We were going to have that 6th seat in the front, which we didn't get, but that's okay. The Cybertruck doesn't matter here. This investment by Volkswagen into Rivian screams that legacy auto cannot alone figure out how to survive in a world of electric vehicles. So they have to partner with the only brand that stands against or holds a candle to Tesla in terms of quality of vehicle and desirability. People actually do like Rivians. You could charge them on the Tesla infrastructure. They're beautiful cars. There's a lot of money that goes into them. One of the reasons they're not profitable is because they make the cars so darn nice. So it's kind of like you're getting a wedge deal of a vehicle. Like, in other words, they've over-improved, so you're getting a good deal in it. If you don't know the concept of wedge deals, or quite frankly, my alerts on how to make money or whatever, you should join the courses on building your wealth over at meetkevin.com. We've got a coupon code expiring this Friday, and if you have questions, you could always email us at staff@meetkevin.com. But let's be real. Volkswagen's investment extends Rivian's survivability into 2026, which is when many would hope that, quite frankly, interest rates will be lower and cars will be able to sell more rapidly. But that's when you're going to be likely in the midst of this EV transition where legacy autos are going to go, crap, we can't really figure this EV transition out. Hopefully our bets are paying off on Rivian or the other partnerships that we have, because otherwise we may go bankrupt. It's kind of like Volkswagen is dropping a call option on Rivian, and we're like, okay. If we go BK because EVs take over, then Rivian will probably be killing it at that point, and at least that money will help us survive. But this is a screaming, shouting announcement from Institutional Auto that they are afraid of Tesla. That they are afraid that Tesla's margins, as battery prices come down, are going to continue to rise. And that Tesla, once interest rates come down even more, will be so hands down, easily stronger than all of legacy auto combined, that once we get out of this rough period of time for Tesla and the interest rate sensitive sector, the stock could explode. Now, I personally think some of that is going to get priced in between now and the Robotaxi event. Robotaxi event is 8/8, no guarantees, don't sue me, bro. You could lose money buying YOLO call options on Tesla. I don't recommend it. None of this is designed to be personalized advice. I just personally think that institutions are going to wake up over the next few days and go, let's look at Rivian's financials. Oh, God, that's a fire pit. Why is Volkswagen investing in a fire pit? Because Tesla's winning. Yeah, it's a big deal. I asked Kathy, what about this? I go, why is Donald Trump so anti-EV? And then she's like, why do you think Elon Musk is trying to start cozying up to Donald Trump? Got to convert that around. She also thinks that Dojo, I can't wait to show the interview, but Dojo is actually way bigger than we think it is. And that Elon downplays Dojo because he wanted to get his NVIDIA chips. He didn't want to poo-poo NVIDIA. Now he's got his NVIDIA chips, sending them to his other businesses. He's got what he needs, pushes out FSD 12. Now he can go all in on Dojo again. That was a smart observation. I don't know. I want to hear what everybody else thinks about that. But personally, I don't know. I'm getting a little excited about Tesla over the next few days. And maybe I'm just making a mistake here. Maybe I shouldn't be buying this thing when it's already up a bit today. But I think once we clean that order book out right at $200, you're going to $220. Again, could be wrong. But the reason I believe that is at $200, you're probably going to have some sell orders. Although I think most people who have already sold or Tesla or already out of Tesla or wanted to sell Tesla already out of Tesla, this is why we keep kind of like slowly climbing up here. I think there could be some selling pressure at the $200 level in the order book for Tesla, but I think after the sell pressure at 200 is gone, 201, 199, whatever, wherever people put their sell orders in. Once those get cleared out, I don't know, man. I don't know. Don't sue me, bro. I could also just blow up my trading account and lose lots of money, but I'm just putting my money where my mouth is. And we're gonna see over the next few days if institutions are like, yeah, we see what's going on here in the industry. Buy Tesla. They might also buy both. They could buy Rivian and Tesla. The problem is you're still buying a sinking ship at Rivian. So I'd rather take money out of NVIDIA, for example, and throw more onto Tesla. So if I had to pair trade this, I'd be long Apple, Tesla, short NVIDIA, and then I'm not opposed to long Rivian, but I'm not super jazzed about it, mostly because I think, it is still a massively money-losing company and there'll be a lot of dilution, whereas Tesla, if Rivian's going to win, Tesla's also going to win. And by default, Tesla already is winning, and it's likely going to have substantially better margins and other verticals. We don't even talk about Optimus and FSD and all the other stuff. So my thesis, thank you so much for watching. We'll see you in the next one. Check out the programs linked down below on building your wealth. We had a really, really good options lecture this morning that we did. We talked for like an hour on educating folks on intro options and strategies for options. So hopefully you enjoyed those. All right, we'll see you soon. Thanks, bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.